Recording in progress.
What's up, everybody? Happy Thursday, and welcome to today's edition of Profits at Noon. Hi, Hal. It's great to see you. Donald, welcome, sir. Hope you guys are having a great week. Clinton, it's great to see you. Gonna get started in just a minute here, guys. Give everybody a chance to get in, get settled. Awesome. If you're joining us over on the simulcast on YouTube, welcome. There's a link underneath the video. You can join us here in Zoom. For a reason, welcome back. It's great to see you again. Hi, Hal. Anybody have any exciting plans for the weekend? I think, me personally, I think I'm just kind of buried in projects around the house. Not looking to get out too much.
Hello, everyone.
Awesome. So I have noticed Thursdays seem to be a day where people have a lot going on. So some of our usual suspects, it's harder for our usual crew to make it in here. So if that is the case, we understand. We'll probably just go ahead and get started. Everyone else, give them a chance to kind of pilfer in as we get this fired up. So welcome, everybody, to the final edition of Profits at Noon for the week. My name is Nate. For those of you that don't know me, co-hosting these sessions with our very own King Richard, who is in the house. So just if you haven't been to one of these sessions before, I think Donald, if you're new to these, basically what we're going to do today, we're going to walk you through analysis on 6 of our favorite futures markets, and we'll cover what we call our levels to lock. Okay, so these are levels that we're stalking, that we're watching, and then of course we do follow up on all of these levels in future sessions. So we encourage you to come on back and see how everything plays out. But the idea is we want to give you a sense, a barometer of where we're at in the market, what could be headed our way, any surprises or traps, news bombs, etc. So we'll do our best to give you all of that info here today. In addition to that, we do sometimes have featured guests and tool spotlights, but today for Thursday, we're just going to wind things down with a normal session. So if you have any questions today, please feel free to fire away in the chat at any point. We'll make sure those are addressed in the order they're received. And, you know, without further ado, let's go ahead and bring in the man, the myth, the legend, Richard Krugel, to lead us in our analysis here today.
Awesome. Thanks, Nate. And hello, everyone. Nice being back. Last session for the week. Can't believe it's Friday already. Almost, not already. It's evening time here for me. When I wake up, it'll be Friday. Anyways, as always, let's go through the quick disclaimer. Please note that all information in today's session is provided for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options, or forex. Right, guys, probably going to be a bit of a short one today. Not really much has changed here. Apart from today's economic calendar, I'm just going to disappear off screen here quickly. We've already had the unemployment claims and the core producer price index figures that came out at 8:30 a.m. EST. So unemployment claims were a bit more than expected. On the ES, price sort of reacted to the downside, still thinking that a potential fourth wave ended here. Donald, I don't know if you followed the previous analysis, but I was sort of thinking around about last week that we could potentially have seen the end of a fourth wave correction, in this case, a pattern that traced out that might have been an expanding triangle, or some people call it a megaphone pattern. Now, I've also been following this sequence to the upside since about the 12th or 13th of March. Noted that we've potentially seen a first wave high, second wave low, and that this was a third wave. I was sort of like in between where a third wave could be. That's quite often the nature of the market. You've got to just like, you know, try to stay on top of things as price does its thing and see if there's any sort of pattern that pops up. Also had a bit of market geometry on this chart applied during this move to the upside. So I'm still thinking that that was the end of the fourth wave, but it will only really be confirmed when price would break above these highs that were set at the end of April. So we were sort of trading sideways leading in Wednesday's CPI figures. Had a bit of reaction to the upside. And today we had this drop again. So the ES is not as strong as the NQ. The NQ is already making new highs for this year. Before we look at the NQ in more detail, is this the start of a much higher move to the upside? I'm still thinking that it could be. This could all just still be corrective, with potentially another wave higher to follow. If that does occur and we see price break these previous highs, I'm still gonna sort of think that this is a fifth wave that might be moving to the upside, and that might complete this sequence, and then we get a deeper correction that could retrace a decent portion of this move to the upside. So that's still the thinking. Price sort of stopped short at today's R1 at 4,179, just dipped below today's pivot point at 4,146. Just fell short of S1 and today's projected range low at 4,114.75. With this sort of whippy up and down, price might actually still hit S1, potentially even take out this previous low of last week, or this week, sorry. But I'm still expecting more high prices on the ES. So maybe following suit of what the NQ is doing. So a bit of a boring sort of market environment at the moment, a bit of a sideways range here on the ES. So I would really like to see price close above today's pivot point at 4,146 on the current 4-hour candle. That might mean that a low is in for today and that we might head towards, finally, either today or tomorrow, maybe even next week, to new highs. Now, there's also this issue about the debt ceiling in the US. I believe they're going to be discussing that tomorrow. Don't know what time that's going to be. And also still, this whole banking thing is still in the back of investors' minds. So a lot of whippy price action. So all I can really have a look at here is the pattern. And I'm still thinking that fourth wave potentially ended with that final fifth wave still underway. So we really need to clear these highs. If that does happen, we could potentially see a nice strong move back to the upside. Until then, might still be stuck in for a while in this sort of range that price has been in for a while. Right, NQ. As I said earlier, the NQ has made new highs for this year. It's not really been respecting this pitchfork that I've had sloping to the upside here that well, although it did find support here around about the end of April at this lower red warning line, broke below it, tested it, and it nearly tested it again today. Also a bit of a dip on the previous 4-hour candle, but most of today's price action's been above today's pivot point at 13,352. If we do see a break here, then price might actually make it to R1 at 13,502. Then we also have this median line sloping to the upside, which might also act as resistance. So although price is making new highs, quite often these angles do act support and resistance for quite some time. So interesting to see that the Nasdaq is so strong, but the ES is still lagging. On the YM, though, also pretty weak. The YM, I've been saying yesterday, has been really, really respecting these median lines very, very well. On this way to the upside, we've had this pitchfork on the chart, which is on the shift setting for quite some time. And we've had this instance where price reached this upper red warning line, came down, support at the center median line, a bit of an overthrow above the upper median line, support at the median line, down to the lower median line support. It did give us a little bit of an underthrow here, moved back to the center median line, so also pretty whippy price action, and price nearly touched the center median line again and has declined. So it's now moved below this lower median line, but as you've probably seen previously, quite often we have areas where price overthrows or undershoots an area of market geometry, in this case the median lines of a pitchfork. You can go and draw a ray or a trend line or whatever you want to use, parallel, and then project it from those areas that price, in this case, at an underthrow. So price has reached that area again. This might actually act as strong support, although we did have a quite strong downwards move on the previous candle. But support could potentially hold here. We also have a bit of confluence between that angled median line that I've copied and pasted. And we also have seen price reach today's projected range low, which is at 33,223. So I would like to see a close above this median line. And sometimes what we call a zoom in and retest or kiss goodbye. Hopefully that doesn't occur. We see this price retest in the area and then you get a deeper decline. So it's all about how today's candle closes in relation to this median line. It might act as resistance again, but if it closes nice and strong above that, we might see the next move higher occur in YM. Russell, as you probably all know, not my favorite market to cover at the moment. Extremely whippy price action. Yeah, it's just been absolutely nuts. You get strong moves to the upside, strong moves downwards, V-shaped bottoms, inverted V's to under tops. And this recent low, when was this? About the 4th or 5th? Yeah, the 4th of this month, nearly breached this low that was set towards the end of March. And yeah, so anyone's guess what's going on here. This does look corrective in nature. I was also saying that potentially this is just some very long-winded triangle formation that could still be going on for quite some time. But yeah, who knows what the case is in Russell. So again, not one of my favorite markets to cover at the moment, because simply just don't know where it's going. No idea what pattern we're dealing with here or could be dealing with. But in any case, price already reached S1, a bit of an underthrow below that S1 today at 1,745. Fell a bit short of today's projected range low at 1,736. So maybe if we do get a close on today's or the current 4-hour candle below S1, we could still see price gravitate towards today's projected range low. Right, and that brings us to gold. Again, I did talk about this, and I really like the way that price has been respecting the market geometry on gold. Again, Donald, I don't know if you've been following my analysis for some time, but we sort of thought around about here at the end of March that we might have been dealing with a triangle. I think it was sort of around this sort of area here. When was that? It was on the 29th of March. I was starting to think that we could see a triangle, but that it wasn't over yet. Price then moved lower, and yeah, the triangle idea worked out really well. What I did then was draw this channel sloping to the upside from this low to this low to this high over here, and you can see how well price has been respecting these angles to the upside, acting as resistance at the top and obviously support towards the bottom. Also really cool sort of example of how well market geometry can work. We have an area over here where price overthrown that upper channel line. So if you just draw a ray horizontal, or not horizontal, sorry, parallel, it's the word I'm looking for, to that area where it overshot, then the recent high perfectly touched that, and we had a strong decline. Even on the way down, temporary support here at the center channel line, we had a move that nearly reached this lower median line, or sorry, I keep on saying median line, lower channel line, and we've had a test once, twice, and recently today a third time for price trying to close above that center channel line, and it got rejected again. So this market geometry, or these angular support and resistance lines, still working really well. Like I said, an overthrow over here. We had a underthrow over here below that lower channel line. Again, if you were to draw just a ray like this and project it from these lows, then we had support, and that final move to the upside. Now I'm saying final because I've been also following the sequence in gold, obviously, like I do with most of these markets, pretty closely. And since the end of Feb, I mentioned that this could have been a 1, a 2. I had 3 over here, and we thought we had a 4th over here, and that 5 would complete over here. But as things have changed, we, instead of a 5-wave move to new highs, which you would expect for a 5th wave, price made a 3-wave move instead. And at that stage, I was saying that if we could see a move downwards, that it potentially could have been an expanded flat, and that sort of worked out again. And we had another strong move back up, which again ended at that parallel line to the channel lines where price overshot that area previously. So that I mentioned could have been the 5th, and that we expect a deeper decline to follow, and thus far it still looks like that is the possibility. So after a 5-wave sequence, we might still see a deeper decline in gold that might retrace a decent portion of this move to the upside. Now, if you just had to use your fib retracement levels, let's assume that was your 5th wave, then we could potentially see a retracement towards the 50%, maybe even the 61.8%. But then again, if we're going to see price finally break out of this upward sort of sloping channel with decent force, then we can start applying market geometry, sloping it to the downside to see if we have any areas where, assuming that it is a correction, right, where that such a correction might end. So again, although price tested the center channel line over here, it also just pipped above today's pivot point at 2040, and as broken below today's S1 at 2024, and just fell shy of today's projected range low at 2015. So I'm actually thinking that gold could still move lower. Maybe this was an ABCX with another ABC to follow, or potentially just a single zigzag with more downside to follow on gold. So I'm a bit bearish on gold over the near term. But again, let's keep an eye on these levels and also the market geometry, and see probably by Monday how and where price is in relation to these lines. All right, so let's have a look at crude oil. As we all probably know by now, follow this analysis. Here's a great example of a 5-wave sequence that we've been following, expecting a decline, but when we did get that decline, price went to new lows instead of correcting, finding a higher low, and then moving back up. So at that stage, I was saying that this was probably a C wave of an expanded flat, which I still think it was. And then we had this one hell of a strong move lower. Price just put these lows that were set around the 20th of March, and then we had the strong bounce to the upside again. So I am treating this bounce as corrective in nature. I don't think it's done yet, unless price obviously starts melting down here. There could potentially be enough evidence that we've seen a 1, a 2, a 3. Maybe this is all corrective with another high to follow, then correct, and then another move upwards again. So yeah, I think if I have to micro sort of count what's going on here, this here could potentially mean this 3-wave move to the upside. I should probably look at a 60-minute time frame here. Pretty much tells me, again, like I showed you there in gold, a 3-wave move in a motive wave, that doesn't occur according to Elliott wave analysis. So this might be an indication that all of this is corrective, that this was an important high, maybe being an A, a B, and now we're getting a C wave that's running out in 5 waves. Could potentially still move lower. If this was a first wave, strong bounce, first wave, second wave, and that was a third, and let's assume this is corrective, then price, and let's say assume this is a 4th wave, I'm just going to draw it like that, then price should not break into the area, where's my horizontal line, of where the first wave ended, which is round about 69.76, 69.87, give or take. So that's the invalidation level for a 4th wave to complete. Quite often 4th waves also retrace towards your, let me get rid of this longer term one over here, towards your 38.2% retracement level. Now, it did shoot below that, it already reached the 50%, but it's kind of finding support here. So if we see another strong move back to the upside, then I'm going to treat that as potentially the fifth wave of the sequence, meaning that I'm seeing this entire thing potentially as a 5 waves, so an A, a B, and then a C, and then maybe a stronger decline at a later stage. That's the thinking. Obviously, things can change on the whim. This is crude oil, can be very volatile. Things can just reverse and drop like a stone again, or on the other side, just move strongly back up again. So I'm sort of cautiously bullish on crude oil and treating what's happening here as potentially corrective in nature. Price already broke below today's S1. It just reached S2, finding support there. Also, you know, that 38.2 almost fell shy of that 50%. Yeah, so that could potentially be it if this was an expanded flat, and we might see another next move to the upside again. Again, this is my invalidation line. If price were to break below this level over here, then that will invalidate that this is a fourth wave, and that we either already had a fifth wave and next wave low is following, or who knows, crude oil is going to decline strongly again. So let's see. Well, again, with all these markets, update all of you guys on Monday. Obviously, we're not having another session tomorrow, so yeah, there'll be another day in between, and then on Monday we'll recap everything again. Right, so that's really the all of it from my side on the analysis side. I see that Donald's got a question here.
Actually, I was just about to put that on your radar, Richard.
There we go. Right, so what's your first question, Donald? I only trade the NASDAQ and watch the ES. The other markets I don't follow as closely. And I'm new to your discussion on the analysis. Thanks today for your expertise. You're more than welcome, Donald. Please tune in again during the next sessions. Quite often, it might take a little while to get used to all of these damn lines on my charts. But I mean, there is a bit of a method to the madness. I do like using a bit of, you know, pattern analysis, what's forming here in front of me, what could be forming, and a little bit of loosely applied Elliott wave analysis, as well as my market geometry. I do find that those three blends of things typically work really well. So quite often do get the market direction right to some degree, as you guys probably have seen in over the last few months since we started these sessions. So yeah, hopefully ES can find some oomph and go to new highs. Maybe I'll start just logging what I'm seeing here on the NQ for you a little bit better next week. Maybe also pull up a bigger time frame like the daily for you. I also have bigger time frames on crude oil, where I've applied market geometry and sort of a bigger picture view of things. I've done that for gold. So if you want to see NASDAQ, I'll do that work for you on Monday. Actually, I'll just do it anyway. Let me just make a note here and bring up a little bit of a bigger picture view of where prices in relation to market geometry, potential Elliott wave analysis, all that stuff as well. So just going to make a note here before I forget and do NASDAQ bigger picture for Donald. Monday. All right. And then we can have a look at that for you. Right. And then I think you've asked another one. If the debt ceiling bill does not pass, would you think that gold climbs higher? Donald, really, I don't know, actually, to be honest. I mean, you know, a lot of people always tell me, yeah, but, you know, gold and the dollar, for example, is highly correlated. I'm really tired today. I can't even speak properly. Correlated. As of recently, I have like the dollar index moving lower, and with all this crap happening, you know, the banks has been failing, this debt ceiling thing, interest rates last year, obviously gold's been moving very strongly to the upside, but now gold's moving lower, the dollar's moving lower, so not that correlated. I'm not even going to say that word again. But I think the important thing here is, for me, at the very least, to look at what the pattern has said. Quite often, you're going to have some news event that comes out. And that sort of like occurs around a time where you've seen a fifth wave or fourth wave or whatever the case might be. They typically, I've found, occurred slightly after prices already reached areas or completed in sequence, in this case, in what I'm seeing as a fifth wave high. So I'm not thinking that gold's going to tank here at all. I'm just thinking that's correcting. They're talking about the debt ceiling thing. I won't be surprised if, there's going to be no sort of agreement about that or what they should be doing very soon. So, yeah, I'm just thinking gold is moving lower and it's potentially just correcting, to be dead honest with you. So I do think gold still head higher over the long run. I do think that, but I think over the near term, potentially still corrective. And then maybe later, and if we do see a deeper move to the downside, like I mentioned, we'll be tracking that and see where such a correction might potentially end, which is also something I've done in this room. So, I don't just track the actual moves to the upside. I do track corrections as well with market geometry.
Excellent. Well, thank you so much.
You're more
Richard.
than welcome, Donald.
Yeah, I think I think something we could also potentially plan for in the future is kind of like a market geometry outlook or spotlight even.
Yeah, for sure.
That could be very cool.
No, you should know all about that, Nathan.
Well, I was
known each other, what, 4 or 5 years now?
I impressed myself. I was actually a step ahead of you on a couple of things as you were going through it. I know what he's about to say. Not because I'm smart or as smart as you, but because, just because we've been working together for so long. You're speaking my language. I love it.
Awesome.
Fantastic.
So guys, got any more questions? Let me know.
Yeah. Please feel free to fire away there in the chat.
Thanks for asking, Donald.
If you're over there on YouTube on the simulcast, please don't hesitate to fire away there in the chat as well. We're happy to dig into it with you. As mentioned, we don't have a tool spotlight or a special guest on deck today. So obviously we'll give you, extra time for Q&A if there's anything on your mind. In addition to that, I thought this could be a good opportunity while we do have some of our core group here, just to get your feedback on something that you'd like to see in future sessions. I know we're sharing live events, doing tool spotlights, bringing in special guests. But is there anything else that, you would really like to see in these sessions? Something that would enrich it for you, increase the value that you're receiving from these sessions. We'd love to hear it. And of course, inform, where we take this in the future. So if you have any thoughts on that whatsoever, any kind of idea, request, anything, we're all ears. So feel free to fire away here in the chat, or if you think of something later, please feel free to follow up via email or the phone number on our website, any number of ways you can get in touch. But yeah, we'd love to hear from you and really make sure that we're able to shape this in a way that, benefits you guys first and foremost. Awesome. Well, I know we have, as of now, we've got a little NQ exam on deck for Monday. I don't know if we're going to do any sort of tool spotlight just yet, but something Richard and I will discuss, and we'll make sure it's on your radar for next week. And then, of course, Signal Trader Lab has been all the buzz lately. If you hadn't had a chance to catch one of those sessions, we will have another live event next week. So we'll be sure to put that on your radar as well. It looks like nobody has any questions for us, Richard. So I guess this is the moment. This is the dreaded dad joke.
Oh dear. What do you have today?
This will have to tide you over for the weekend, so it's got to be extra bad.
Oh, no.
So, Donald, if this is a little part of our routine as well, we like to share a terrible pun, or what is more colloquially referred to as a dad joke. So today's dad joke, going into the chat here in Zoom and on YouTube. Richard, did you hear about the guy who lost the left side of his body?
Nope.
We'll let that linger just for a minute if anybody's gears are turning
It's probably
on
going to
what
be terrible.
dark, terrible place this could be going. Did you hear about the guy who lost the left side of his body? He's all
Get
right
it.
now.
Let me know.
He's all
He's
right
all
now.
right. Oh dear.
He is.
That's one
all
I can tell my kids at least.
Yeah, there you
I
go.
remember it.
We try to keep it PG as well, so they're
Yeah,
generally
yeah.
family friendly.
Yeah, it's horrible.
Donald, that is the appropriate reaction. So Donald is hip. He knows how to react to these things in lieu of Jackie's reaction today.
Yeah.
Excellent. Well, thank you guys so much for being here, for spending time with us, for joining these sessions and allowing us to get together with you. Of course, we'll be back, Donald, next week, Monday, Wednesdays, and Thursdays, noon Eastern time every week. So we'd love to see everybody on Monday. We can get together, go ahead and set our expectations for the week. So love to have you for that. In the meantime, everybody have a great weekend. As mentioned, feel free to reach out in the meantime on any of that feedback or if you have any questions that come up, and we'll be happy to dig into that with you. But yeah, have a great rest of your weekend. We'll see you on Monday, and thank you again, everyone.
Yeah, thanks everyone. Have a good one. Enjoy the rest of your day and weekend. And yeah, we'll touch base again on Monday. Have a good one.
All
Goodbye.
right. Bye-bye, everybody.